Hey guys, welcome back. I hope you had a really great weekend. So it is almost that time again. We're about to start a brand new week of trading. And before we get into tomorrow's trading ranges, let's look back on last week so that we can better understand what happened and so that we can take better trades in the upcoming week. So starting in SPY, we did open last week with a gap up. It was a small gap up to the first resistance level that we saw the week before that. That previous Friday and Thursday, we saw resistance right where we gapped up, and then we got pushed back down to the 50-day moving average. Then from there, we bounced back up to that resistance, and then we pulled back to the 35 EMA. So very neutral start to the week. And then on Tuesday, we did gap up to that resistance level again, and then we dropped underneath the 35 EMA and underneath the 50-day moving average. And we filled that gap from the previous week, Thursday going into Friday, where we gapped back up above the 50-day moving average. So we did close that gap, and then we did bounce there to close the day just underneath the 50-day moving average. And that was Tuesday. That was the day before FOMC. So Wednesday, we had FOMC, the rate decision, and Jerome Powell speaking, and we opened Wednesday with a gap completely outside of the implied move, and we got into this island top gap right here, and that was from the beginning of the week before last. It was a gap up on Monday, and then the gap down on Wednesday. So for FOMC, we opened right in that gap, and then we came up and filled the bull gap. Then we pulled back a little bit and popped up and almost completely filled the bear gap. We left just a little bit open before we pulled back. Then on Thursday, we gapped up above the 30-minute 200 moving average. We filled the rest of that gap, and then we had a huge drop back underneath the 50-day moving average. So Thursday basically gave back all of the gains from FOMC. You could see right here we closed Tuesday right here, and then we closed Thursday right here. So almost no move at all, still underneath the 50-day moving average. And then on Friday, we started the day with disappointing job report data, and that triggered off a sell-off. We gapped down underneath the implied move completely. Then we came back up just a little bit in that first candle, and you could see this gap right here. That was the gap from FOMC in June, and that was our resistance. And from there, we sold off and we got down to the 4-hour 200 moving average, and we did see a little bit of support at that level. So last week we had significant volatility. VIX on Friday was, I believe, 55% up. That is a huge volatility spike. We haven't seen anything like that, definitely not this year. So huge down day on Friday for SPY, down 1.86%. VIX popped 25% at close, and we did not close within the implied move, and we gapped completely underneath the implied move. And in the second half of the video, I will go over the other times where we completely gapped out. That has happened many times in the past few weeks, and each time it pushed us up in the direction of the gap. So we had 3 down gaps where that happened, and then this was the bull gap right here, right before FOMC, where we gapped completely outside of the implied move, and that just pushed us higher. So really wild week. And then taking it over to QQQ, we opened the week in the Nasdaq right here, and we also gapped up right to the previous resistance that we saw last Thursday. Friday we came close to that but didn't see that level, so we gapped up to that level, came back down, tried to get above that again, and then settled right at the 35 EMA. Tuesday, we dropped down, and we did fill this gap from the week before. This was Thursday going into Friday, and we closed that gap out, and then we took it all the way down to the 4-hour 200 moving average. So this was the day before FOMC, and on that Tuesday we did also get weak manufacturing data, which could be a reason why we did see a more cautious move ahead of FOMC. And then for FOMC, we did open with that big gap up above the implied move, and then we pushed it up and took it just underneath the 50-day moving average. And then Thursday we gapped up, we hit that 50-day moving average, and then we also saw this level right here, which was previous support, now turned to resistance. So that support was right here, and then we saw it again right here. So back here, that was June 24th and then July 19th. So that level we gapped under, and then when we came back up to that level for FOMC, it pushed us all the way back down to the 4-hour 200 moving average. So that is at 474 and clearly a resistance now. Previous support turned resistance. And from there, we saw a little bounce at the end of the day, and then we gapped down on Friday completely outside of the implied move. And a lot of that had to do with Amazon had earnings on Thursday, and earnings did miss, and we also did see lower guidance in Amazon. So big sell-off in Amazon on Friday. I believe it closed about 8% down. And that, of course, reflects in QQQ pretty strongly. We gapped completely outside of the implied move, dropped down to this next support level, and that was right here. We saw a little bounce back, but did not get back into the implied move. And on Friday, not only did we make a move on Amazon earnings, but we also did see that disappointing jobs report and terrible unemployment numbers. So a really big down week in QQQ. We did open the week right here and close the week right here. So almost 4% down on the week. Friday down 2.37%. VXN closed up on Friday 12.14%, and we did not see that implied move at all on Friday. And then taking it over to SPX. So SPX, just like SPY, opened with a gap up to start the week and right to the first level of resistance. So where we saw resistance on the previous Friday and Thursday is right where we gapped up, and then we did get pushed back down, came back up to that resistance, and then settled right around the 35 EMA. So extremely neutral open, and then on Tuesday we gapped up, a small gap up right back to that resistance, and then we dropped. We came into this gap from the previous week. It was Thursday going into Friday, the gap that ended the week before, and we came into that gap and filled 95% of it and saw a bounce at that level back to the 35 EMA. So overall, even though we did have a pretty decent sized move on Tuesday and we started showing signs of volatility, we still had a pretty neutral first 2 days as we settled really close to the 35 EMA here. And then that takes us to FOMC, where in overnight trading, we saw a gap up completely outside of the implied move, and that pushed us up to fill this gap from the week before. And this was the gap that was that Monday. So we had a gap that opened not last week, but the week before that, that Monday right here. And then Wednesday right here was the bear gap. So we came in and closed this bull gap, pulled back a little bit, and then pushed up and closed most of the bear gap. So a little bit of that bear gap left open. That in and of itself should have been a warning sign that if we came into that gap again, we would get pulled back. And we did. We opened Thursday with a gap into that top part of the gap that was left open, and we got slapped back down all the way underneath the 50-day moving average. And then, of course, on Thursday we had Amazon earnings, and Amazon guided down. And then also on Friday in pre-market, we did get terrible jobs data. We got a jobs report showing the worst unemployment numbers since the start of the pandemic. And that triggered the sell-off where we gapped completely underneath the implied move. And we got underneath this gap right here. This gap was from FOMC in June, right here. So we didn't close it out. We just gapped under it. And then when we came back up, we filled it about 3/4 of the way, and then we dropped down to the 4-hour 200 moving average. So serious moves last week. From top to bottom was about 5, and you could see this wild volatility. Started the week neutral, and then that 50-day moving average, we just had bigger and bigger moves around it until we finally settled right around the 4-hour 200 moving average. So that was SPX. SPX did close down 1.84%. VIX popped 25.83% to close the week, and we did not close within the implied move yesterday or even the following day's implied move. We got pretty close, but still pretty far. If you were trading spreads on that, that is way too far out to count on the day. And SPX, I'm going to move it to be right after SPY. I'm not sure why I don't analyze SPY and SPX together, but starting today, I just moved it on my lineup. They're going to be together. So that was SPX, and then let's take it over to IWM. So IWM started the week cautiously optimistic. We did open right at resistance and then got pushed back down and filled last Friday's gap most of the way here, and then we did close right near the 35 EMA on Monday. Tuesday we traded sideways along the 35 EMA, setting us up for FOMC. And FOMC did take us to fill the bear gap. This bear gap that went back to 2001, we filled it to the penny, and we didn't even get 1 penny outside of that gap. That goes back to right here. If you knew that gap was there, that was the most perfect short entry you could have ever asked for. That gap goes back to Monday, November 22nd of 2021, that week, not specifically that day, but if you go back to that week, it's within this candle, it's within the week, and we gapped down. Then when we came back up, that was a resistance. And then when we came back into that gap on Wednesday with FOMC, we closed that gap out and it immediately turned into resistance. And that does happen with long time gaps like that. So you can see we got smacked completely out. We closed out the rest of that gap from the previous week. We dropped underneath the 30-minute 200 moving average. We got the bearish signal right here on Friday. It was actually starting to show signs at the very end of Thursday, but Friday we got the follow through. And then on Friday we gapped down underneath the 1 hour 200 moving average, and we settled right above the 50-day moving average. So we ended up actually closing out the week underneath this long 211 previous resistance. So let me zoom back out really quickly and show that. So this red line right here was resistance in March, and it was resistance back in 2022 when we did see that big drawdown. And prior to that, during the COVID era here, it was support. So 211, we did break above that in the previous weeks, and we are just completely unable to hold that level. We crashed right back through it and are back under 211. So a previous support level turned long time resistance, turned possibly back into resistance. We were unable to turn it into a support at this time, but it is directly above us right here at 211. So it's not out of the question that we regain that level, but we do also have a pretty nasty down gap right here that I didn't quite put in, that gapped under 2 up gaps above that 211 level. This is going to be quite the battle zone right here. So IWM down 3.54%. Russell Volatility Index, 12.14% up on Friday. So Russell is up in the 30s for volatility. If you trade a RUT at these levels, make RUT a really attractive option to trade. And we did not see the implied move on Friday. So really interesting week. We took it back to where we were 3 weeks ago. So clearly this breakout was unsustainable by current economic conditions. All right, so that was IWM, and let's go look at the Dow. And what a statement the Dow made here with this gap down on Friday. On Friday, we gapped down completely underneath the previous week's up gap that was on Friday. So Thursday into Friday, we gapped up. We got back above the 35 EMA. Monday, we started the week pretty neutral. We stayed above the 35 EMA into Tuesday. FOMC, we did pop and we did take it to the top of the average volatility there on Wednesday for FOMC. But after that, we dropped, and we dropped really hard. So Thursday, we came down to right where we gapped up the previous week. We got into that gap a little bit, but saw a pullback up. Right here, we got our first bearish signal for the Dow Jones, and on Friday with that weak economic data, we gapped down. We got underneath the 1 hour 200 moving average, and we took it all the way down to the 50-day moving average. So absolutely huge. We did see so many things, including a close outside of the implied move, a bearish cross down here, and this island top right here. So the up gap from the previous Friday and the down gap on Friday is now going to be a huge resistance level. So last week was absolutely no joke to trade. Hopefully you guys ended the week green. I had a lot of ups and a lot of downs. I did end up closing the week green, but not as green as most weeks. The Dow did close down 1.51%, and we did not stay within the implied move for the week. And the key takeaways from last week definitely need to be this down gap on Friday, so this new island top resistance, and that we are back at the 50-day moving average. That is going to be in focus. And since making all-time highs a few weeks ago, we are seeing lower highs and lower lows. So this is possibly the beginning of a bigger downtrend. All right, guys, so that is a recap of last week. And if you guys find my videos valuable, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications, especially now that I've split my videos into 2 parts during the day, so you get notified when I do put those videos out. If you did take an amazing trade based on something I taught you or something I said, then please don't be afraid of that thank you button. It's a really easy way to show appreciation for all the work that I do putting this content together. And make sure you leave me a comment if you have any questions. I do get back to all of them. There's no such thing as a dumb question, and we're all in this together, so ask away. I'm gonna end this video here, and I'll be back in a few hours with the trading ranges for tomorrow. With VIX up 25% at close on Friday, it should be really interesting. We should have some really interesting trading ranges. So have fun, trade safe, make sure you take profits when you're up, and I will see you guys